If you want your early retirement to survive past January 2026, instead of facing premiums that suddenly triple, losing the subsidies you've been counting on, or realizing that your healthcare strategy just collapsed, you need to understand what the One Big Beautiful Bill Act just did to people like us. Hey, I'm Jason. I retired at 39, and ever since, I've been deep into studying everything about retirement. Not as a certified financial planner, but as somebody actually living this life and researching the heck out of it. Now, before we dive in, the usual disclaimer. Always consult with a real professional, a tax advisor, a healthcare specialist, or a financial planner before making any major decisions about healthcare or your money. This stuff is too important to get wrong. Today, we're tackling something that's keeping early retirees up at 3 a.m. in the morning. Health insurance costs that are about to explode for a whole lot of people. And by the time that we're done here, you'll know exactly how the One Big Beautiful Bill Act is changing early retirement health insurance, what this whole subsidy cliff thing really means for your wallet, and the actual strategies that people are using right now so that they don't get totally crushed by these changes. This isn't just theoretical stuff. This is actually happening starting January 2026. So I got this email last week from my friend Rachel, and honestly, it made my stomach just drop. She wrote, "Jason, I'm panicking. Our health insurance is about to go up by over $1,000 a month. We might have to go back to work." And the thing is, Rachel's email wasn't like dramatic or anything. It was just honest and scared, She said, "We thought we're doing everything right, and now I don't know if we can afford this." Rachel retired when she was 58, so that was about a year ago. And now she's looking at these massive increases in her health insurance starting in 2026. I mean, how the One Big Beautiful Bill Act changes early retirement health insurance, it's not just some policy thing, right? For people like Rachel, it's literally the difference between having freedom and having to go back to a job that they thought that they left behind forever. So, like I said, Rachel and her husband Greg, they retired last year. And she was 58, he was 60. They've been planning this for years, right? They found this ACA marketplace plan, pretty solid silver plan, for about $1,500 a month at full price. But here's what gets interesting. With the premium tax credits that were around under the American Rescue Plan, what they actually paid was somewhere around, I think she said like $600 a month, something in that range. And, well, that's livable, That's what made their whole early retirement thing actually possible. They're doing okay financially, but it's not like they're super wealthy or anything. I think their modified adjusted gross income was about $90,000 a year. And that comes from a mix of things like investment income, some dividends, a small pension that Greg gets. And under the rules that have been around since 2021, even though they were above the 400% of the federal poverty limit, there was still a cap on what they had to pay. No more than 8.5% of their income. And the subsidies, they just covered the rest. And now, that whole safety net is just going away. So, the One Big Beautiful Bill Act, it brings back this thing called the subsidy cliff starting in 2026. And here's what that actually means in normal language. If your modified adjusted gross income goes over 400% of the federal poverty limit, you get 0 premium tax credits, like nothing. So you end up paying the full price for your health insurance. And for a household with 2 people, 400% of the federal poverty limit is $84,600. So if Rachel and Greg's income is $90,000, which is $5,400 over that line, they lose their entire subsidy. Their monthly cost goes from around $600 to around $1,500. That's almost an extra $1,000 a month, or like $12,000 a year. Real quick, I went from trading my life away for a paycheck to living on my own terms with $1 million and the world is my office by 39. Want the same freedom? Subscribe to this channel now. I break down the exact strategies that actually work and the brutal reality of what early retirement demands from you, because you need both to escape the trap and actually stay free. So, actually, this whole thing gets even worse. Not only is the subsidy cliff coming back, the contribution percentages are going up across the board too. So, even if you're below the 400% threshold, you're still paying more. People who used to have 0 expected contribution, Families making under 150% of the poverty level, now they're going to have to contribute between roughly 2 and 4% of their income, depending on exactly where they fall in that range. And for a family at that income level, I mean, that's a pretty significant increase in what they're paying out of pocket. Oh, and the bill also brings in these new work requirements for Medicaid starting in 2027. So if you're on Medicaid and you can't meet those requirements, or you just kind of fall through the cracks with reporting them, you could actually lose your coverage. Let me just be real with you about where I'm at. I'm on Medicaid right now, and I'm not worried about it though, because the time that we spend working on these videos, that satisfies those requirements. My wife and I, we make YouTube videos, obviously, and this channel, we've got our travel channel too, which you should totally check out if you're into traveling during retirement. You can find a link down in the description. So our channels bring in just a tiny bit of income, not a lot, but enough that we're treating it like a business, not simply as a hobby. We're putting in real work hours every week, researching, filming, editing, responding to comments. I mean, we're technically actively working, even if it's not like a traditional job or anything. But if you're on Medicaid and you're not thinking ahead about this, you could be in for some real trouble. The Congressional Budget Office actually estimates that just the work requirements alone could cause around 5 million people to lose their coverage. And with all the bill changes combined, it could potentially affect 10 million Americans by 2034. Hang with me, because in a few minutes, I'm going to walk you through the actual strategies that people are using to handle this without going back to work or draining all their savings. There really are options here. Alright, so here's where it gets kind of tricky, and this is the part that most people miss when they're planning. Your modified adjusted gross income, it's not just your paycheck, right? It includes capital gains, investment income, withdrawals from retirement accounts, Social Security, pension income, even tax-exempt interest from municipal bonds. Everything counts. So let's say you're retired, you're 60, and you're trying to live on $70,000 a year. You're thinking that you're safe under that 400% cliff, right? But then you decide to do a Roth conversion, and you pull $20,000 out of your traditional IRA to convert it to a Roth. And suddenly your income that year is $90,000. Boom, you're over the cliff. Your health insurance cost just more than quadrupled because of this financial move that was supposed to help you in the long run. Or maybe you sell some stock to pay for a new car or some home repair. Well, capital gains count too. So you could accidentally push yourself over that threshold without even knowing it until you're doing your taxes. And by then, it's way too late. This is what I think about most with all this stuff. The people getting hurt. They're not the ones gaming the system or anything. They're people like Rachel who saved, who planned, who did everything that they're supposed to do. So I want to hear from you in the comments. Are you planning to retire before 65, or are you already retired? And how are you thinking about these changes? Drop your thoughts below. I'll read them all. Alright, so what can you actually do about this? Well, here's some strategies that I'm seeing people talking about right now. First, you got to structure your retirement income intentionally. Some people are being really strategic about which accounts they're pulling from and when. If you've got taxable brokerage accounts, some types of gains get taxed more favorably than others. If you've got Roth IRAs, those withdrawals might not count as income, but the conversions that fund them, those do count. So the order really matters. Second, think about delaying big one-time events. If you're thinking about selling an investment property or taking a big capital gain, maybe think about the timing for years when you can absorb that income hit. Or you could split it across multiple years. Third, and this one's really important, you've got to understand that there are state variations here. Some states have actually added on to the federal subsidies. Some states have different Medicaid rules. Where you live actually matters now in a way it might not have mattered before. Fourth, talk to a tax advisor who specializes in early retirement and ACA subsidies. I'm not a tax guy, I'm just someone who's paying attention to all this. But the people who've worked with someone who understands both tax strategy and healthcare subsidies, they're making way smarter moves. And this is honestly worth paying for some professional advice. So, where does that leave you? If you're planning to retire before 65, you should start running the numbers now. You need to know your modified adjusted gross income. Know where the 400% federal poverty level sits for your household size. And know what your health insurance will actually cost if you lose those subsidies. Talk to a tax advisor who really understands ACA subsidies in early retirement. Talk to a healthcare specialist. This really isn't the kind of thing that you want to just guess at. And one bad move could cost you thousands of dollars that you didn't even budget for. And if you're already retired early and you're realizing that these changes are going to hit you, start making adjustments now. You've got a small window of time before January 2026 to look at your income sources and to think about which accounts you're pulling from and get ahead of this instead of just reacting to it. Look, my friends, the subsidy cliff is real. The cost increases are real. The work requirements are real. But the strategies to deal with them, those are real too. You just have to know that they exist and be willing to adapt. But here's the thing that I keep coming back to. People are resilient, you know? Rachel and Greg, they're not giving up. They're adjusting. They're learning. They're finding ways to make it work because the alternative, going back to jobs that they don't want, well, that's not really an option that they're willing to accept. Understand that if you're in this situation, you're not alone. But there are strategies. There are ways to handle this. It just takes planning, flexibility, and yeah, it takes staying informed about stuff like this that most people don't really want to think about. The One Big Beautiful Bill Act, it's definitely changing the game for early retirement health insurance. It's making things harder, no question. But people like you, people like Rachel, people like me, we're figuring it out. Because we didn't retire early just to give up when things get complicated. We retired early because we wanted to control our own lives. And that means staying informed and staying flexible. But remember, I'm not really an expert in this stuff. I'm trying to sort through it all just like you. So before you make any decisions about healthcare or your money based on what you learned here, talk to a real professional, a tax advisor, a healthcare specialist, someone who knows your specific situation. This is just too important to leave to chance. I went from drowning in conventional wisdom to breaking free with a real plan in about 18 months. Ready to face what's really holding you back? Watch this next.